Why? 3. Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:30 a.m. here in Manila this Wednesday morning. We are about an hour into the shortened trading day. Let's kick off with our top story. We kick things off with the big dollar bond sale by the government. The Treasury reported that it was able to sell $1.35 billion in 25-year bonds and $1 billion in 10-year papers. That is almost 7 times more than a usual benchmark size, which was estimated to be the original size of the offering. Investors flocked to the offer. Treasurer Rosalia De Leon told reporters the total bids hit up more than $10 billion. And because of this demand, the treasurer said the bonds fetched some of the lowest coupon rates ever in the range of 2.45% and 2.95%. This will be used to augment the budget as the government's revenue sources start drying up amid the pandemic. The BIR has slashed its collection target by 12%. That, of course, is amid the anticipation of slower economic output. Now, for the year, the BIR is targeting collecting 2.26 trillion pesos. That's more than 300 billion pesos lower than its original target. And now with slowing revenue, spending is also slowing down. The latest data from the DBM showed that infrastructure spending fell by a fifth in the first 2 quarters of the year, but that is just because of high base effects from last year and before the pandemic took a grip on the economy. Now, for the rest of the first half, that slump is expected to continue as projects get paused. Happy Happy hump day, and the index is indeed going through that hump. We are trading sideways right now, up by 0.06%, still well above 5,500 levels right now, 5,578.26. Now, this follows how we rallied yesterday. And recall that Aaron Sai of First Metro Securities called a rally simply a bounce back. So not necessarily a trend there. So we did bounce back on Tuesday, up by 2.3%. Phil Stocks' Claire Alviar said that this was on the back of some hints from the government of a gradual lifting that can happen after the ECQ might be lifted on May 15th here in Luzon. So she did mention that given this, most companies could actually start operating again. Consumer demand, companies' income expected to recover along with the economy. Now, still, despite this issue that spread some positivity, you can still see our net foreign selling really worrying here as we are now at the 30th straight day of a net foreign fund exodus. We lost around 471 million pesos worth from foreigners. And just a quick peek on what sectors are actually outperforming this Wednesday morning. It's a pretty mixed picture here with mining and oil up by 1%. But you can see financials gaining a touch, up 6%. So continuing that rally from yesterday, holding firms as well, but services and industrials sitting out this extension, let's say. Now, let's take a quick peek at how Asia is performing amid how Wall Street actually slipped overnight. You can see that the Dow Jones, the three main indices in the US actually slipping lower. And this, nevertheless, has had little impact because we did see some stocks, and most of the stocks actually in Asia, save for Japan, which is actually on holiday today. You can see the Hang Seng, for instance, by 1019, up by 0.4%. That's together with all of the indices of China in the green, together with Singapore and Malaysia, as well as the Kospi up by 0.9% as of 1034. So a lot of optimism still in Asia, that despite the fact that Wall Street was quite difficult or had a difficult trading day yesterday. Recall that there's still a lot of policy issues on the board here, particularly in terms of monetary easing. You've got the Fed. The policy decision is due today, Wednesday in the US, and the ECB meets on Thursday. Now, one thing to be watching out for is URC. Now, this has been the darling of stockbrokers during this enhanced community quarantine, but you can see that not necessarily enjoying this extended rally that we've seen for the rest of the local bourse is actually down by 1.5%. And this on the back of them having just released their first quarter earnings. A lot had been anticipating how that is going to go. And basically, the first quarter of 2020 is at par with last year. When you take a look at sales, you can see that rolling on your screens right now. When you take a look at sales, it was up by 0.4% to 33.5 billion pesos. But if you take a look at net income, that was down by 32% to 2.1 billion pesos. Although they have highlighted that that is on the back of non-operating foreign exchange losses. But actually, if you take a look at operating net income, that was more or less at par with last year. So they did mention that they are, of course, as everyone else, challenged during this enhanced community quarantine. But take a look at their segments here. The branded domestic revenues, that was up by 3% year on year to 16 billion pesos. But the international revenues were what actually took a hit. That was down 2%. But still, the agro-industrial and commodities were up by 9%. So close to 10% gains here, up to 7.8 billion pesos. Now, this from Erwin Lee, who is, of course, the URC president and CEO. He said they started 2020 well. So they did make immediate steps to adhere to this crisis, and they did mention they have a healthy cash position that will allow them to emerge even stronger. They said they have around 20 billion pesos still in terms of cash. But as I mentioned earlier on, investors not really taking that to heart right now. I just want to take a quick peek at the year to date to see how this has performed throughout this quarantine. It is down 16% year to date, but compared to the 30% losses of the rest of the index, I guess that is not as bad. And very quick peek at what analysts are still saying. We might be seeing some revisions over here, but still 12 buys, 8 holds, and 1 sell for URC stock. So still a lot of optimism on this stock. Now, more on markets later on in the broadcast. And later on, we're also going to be talking with FAMI, our First Metro's Asset Management's Ed Sir Trinidad. Moving on to headlines we're watching this Wednesday. The Bangko Sentral is waiving fees for financial institutions seeking to roll out digital channels like online banking facilities and electronic wallet platforms. The BSP said the Monetary Board approved the suspension of filing, processing, and licensing charges for electronic payment services. That's as part of relief measures for the financial institutions who are grappling with sustained lockdown measures. These processing and licensing fees currently range from 10,000 pesos to 100,000 pesos, depending on the type of the institution. The relief measure will take effect for 6 months. It's starting March 8, when President Duterte declared a state of public health emergency. Now, the BSP said the waiver of fees may be extended beyond September 8. That's depending on the developments in the coronavirus pandemic. In a statement, BSP Governor Ben Diokno cited the importance of, quote, shifting consumer behavior toward e-payments, considering the limitations on the people's movements as well as activities during the ECQ. The Philippine Statistics Authority is looking to launch full-scale registration for the national ID system come October. The PSA is now targeting 10 million people for its pilot registration. This first round of registrations was supposed to begin earlier this year, but Deputy National Statistician Lourdes de la Cruz said they had to prioritize the safety of the personnel manning registration centers as well as of the applicants. De la Cruz says the PSA hopes to register most Filipinos before President Duterte steps down in 2022. Now, recall that the president signed into law the Philippine Identification System Act that was way back in 2018. Several lawmakers have since called for an investigation on the delay of its implementation. Senate President Tito Soto and Senator Ping Lacson said a national ID system could have facilitated a more organized distribution of government aid in light of the current public health emergency. The Senate committee is considering amending incentives under the proposed SITIRA to benefit industries deemed essential during this COVID-19 crisis. Now, in a virtual hearing, Ways and Means Committee Chair Pia Cayetano said this is a good opportunity to incentivize sustainable and job-generating industries as well as those that provide medical supplies, equipment, and other essential goods. Cayetano also notes that the SITIRA bill will complement the Balik Probinsya program, saying SITIRA's structure will facilitate the giving of provisions to those who will relocate to the province. Amendments to the bill still require consultation with the Finance Department and the NEDA. Cayetano said, though, that the proposal has to be reviewed soon or else the Senate may have to return to the drawing board. Cayetano said the reaction from other senators and the administration determine whether the bill is declared a priority measure when session resumes on May 4th. AVID, or the Association of Vehicle Importers and Distributors, said imported vehicles may drop by 40% this year. This is because of the shutdown of car manufacturing and distribution caused, of course, by the Luzon-wide lockdown. AVID reported on Tuesday that imported car sales dropped 34% to 14,000 units. That's in the first quarter. That's due to closures of dealerships along and their repair and maintenance facilities as well since the lockdown began on March 17th. Imported vehicle sales had steadied though in full year 2019. That slipped only 0.5% to almost 80,000 from the year before. AVID said that the second quarter sales may fall even further as the ECQ was extended to the month of April and half of May in major urban areas. The ECQ was, of course, extended up to May 15 in areas in Luzon, including Metro Manila and Calabarzon. The local industry is reeling from this invisible enemy as vehicle manufacturing, importation, distribution, and maintenance have stopped completely. Demand has likewise declined as consumers spend on more urgent needs, and with this disruption, we estimate that car sales may drop by around 40% for the year. This is according to Avid President Maria Fe Perez Agudo. She says that they are working closely with their stakeholders so they can resume operations, particularly when it comes to repair and maintenance services once the ECQs and the GCQs are lifted. So some glimmers of hope right now in our local bourse, especially as there has been some indication that the ECQ may gradually be lifted after May 15. Should we now start riding the recovery when it comes to our equities? To join me here, we have, of course, Edser Trinidad of First Metro Asset Management. Good morning, Edser, and welcome to the broadcast.
Yes, good morning.
Sir, we had 4 straight weeks of gains until we then lost all of those gains in a week. And not all of those gains, but we actually pared back those gains in 1 week. Now we are finally sort of trading sideways, seeing signs of improvement. Is there now a clear upward trend when you take a look at the long-term perspective during this whole lockdown, during this pandemic? Are we back on the recovery path?
Well, unfortunately, we're not yet out of the woods. I expect their volatility will remain high. I think what investors are looking right now is for catalysts that can help them make the decision whether or not to, whether we're basically out of the woods or we're still, facing some challenges down the road.
Okay, but right now, we have already gotten some indications from guidance from companies and a lot of contractions, of course. And now it's a little bit clearer, let's say, what might happen after May 15. We have some malls already starting to open, and we're seeing how they're going to be operating very, very soon. Can you say that a lot of these risks have already been priced in when you look at equities, and there's much more clearer view on what's going to happen?
I think while there are still some positive indications that the ECQ will finally end, and there's a gradual opening of our economy. There are still a lot of questions in relation to what kind of pace will our economy grow. Second, will there be let's say, a resumption to normal life? I think there are still a lot of questions that has to be asked. So I think market will basically be just taking its cue from any new data that will come in.
Okay, and so you're going to be seeing on my terminal right now how our valuations are at the moment. It has slid dramatically below 12 times 12-month forward PEs. You can see it recovering a touch at least the past few days here, as we've seen, as I mentioned, the 4-week streak, and then now again. Tell us, do these valuations reflect still panic selling and what's going on, or are they investors and managers like yourselves fundamentally replacing the impacts on the bottom lines of some companies?
Well, I admittedly, I think the market hasn't yet really gotten in a real hold on the company's earnings moving forward. So what you're going to look at right now, well, it looks like the market's currently trading at 12.6, but there are no, some assurances that forecast moving forward will be adjusted downward, because right now companies have started to, come up with their first quarter numbers, and the market will still have to digest in terms of how basically what will happen for the rest of the year. Again, there are still a lot of moving parts that you would have yet to, to pan out. In our opinion, I think earnings estimates at the moment are still up for some adjustments. So what you're looking at now will be a 12.6 PE, may turn out to be 14 because of some potential downgrade.
Okay, downward adjustments in your view in terms of the earnings estimates. Sir, another thing that highlights your view that we're not out of the woods yet is the fact that we've seen 30 straight days of a net foreign outflow. But you can see that slowing down a touch. I mean, why the flight? Are there, first of all, we're becoming cheaper. Second of all, the peso is generally stable, the inflation indicators as well. And compared to other economies in the region, we still have a chance, according to some economists, to see some, flat to positive growth if this pandemic is contained. So why the lack of faith from foreign investors, especially as domestic investors are still picking up the stocks?
It's more of, if you're going to you're basically be on the shoes of a global investor. Um, Certainly, you have to first, do an analysis, or looking at your investments. In this kind of uncertainties, the best thing to do for a global investor is basically move your money away from emerging markets and go to developed market, because while our valuation admittedly is now more um, reasonable as compared to historical valuation. But you have also to bear in mind that the developed markets valuation are also have also gone down. So for a global investor, it will, I think, be more prudent on their side to just look first at at their own backyard rather than looking outside.
Okay. Sir, is this a temporary situation or is this something that you feel would persist throughout the rest of the year?
I think at least for the first half, we may be seeing a lot of volatility, but I think by second half we expect that there will be some recovery, considering that we'll start to see that economy is going back into on its feet, and at least we'll now be seeing some clear indication on the effect of the stimulus program that the government will employ.
Okay, sir, let's talk about how you're seeing the oil story, evolve here and its impact on the peso, which has been actually one of the, I wouldn't say best performing currencies, but less
Yes.
or less hit as volatile currencies here. Our foreign investors are not appreciating this fact.
Well, I think in general, a weak crude oil price in the world market is generally negative for a lot of countries, and I think on our side, our country is basically one of those will benefit. Although um, we may see some negative impact, especially on our remittances (OFWs), but a lower
Okay.
crude oil price is actually positive in our economy because, first of all, we're a net importer of fuel, and a lower fuel price will also will help contain our inflation. So it will also help our current account balance because of the lower fuel oil price, there's a lower import bill. So in a way, our that's the reason why our currency has been one of the best performing currencies in the world because our concerns of about a growing current account deficit is now temporarily been halted because of the lower oil prices.
Okay, so hoping that that translates into foreigners having a bit more faith in us. You can see on my terminals here, just to show our viewers, so WTI for the May 20 futures are now trading at $14 per barrel. That now seems, normal in these times compared to the fact that it had turned negative in the past few weeks. Now, just on the fact that, I just want to clarify for our viewers here, Ed, sir, the fact that you are managing funds, asset management funds, compared to First Metro Securities, which you're looking at individual stocks. Is this the time to be investing in funds? How are the funds doing? In theory, it's supposed to be more, diversified and less risky than having invested in individual stocks.
Yes. Well, admittedly, even the funds are not, are not immune in this environment. But I think there are funds that have done better as compared with the market. In fact, our company, our funds have fairly performed better as compared with the rest. I think it all depends on how you invest and more on how you allocate your funds to each sector. I think what worked well in our favor is we decided early on that I think we may be seeing a lot of challenges down the road. So we're able to adjust our portfolio to better cope with in this downturn.
Can you clarify, sir, how you rebalance this portfolio? Are you now more overweight on certain sectors? And are you, more actively managing this in the short term right now, or are you still sticking to the long term views? And if so, how long term is long term recovery?
Um, we're basically now overweight. There's now one sector that we're basically overweight, and this is telco. For the rest, we're either neutral or underweight. And for the rest of the sectors, what we do is we are very selective on quite a few names. In addition, we've
Hmm.
also early on decided to reduce our equity exposure, uh, and that has also helped us minimize the losses.
Okay, so right now you're overweight on telcos in the light of the ECQ. So let's talk about specific sectors here and your general outlook. Of course, everything is having a difficult time, but just to see
Yes.
how long it's going to take for certain sectors to bounce back, let's kick off with retail. You've got some
Mm.
malls now announcing, as I mentioned, reopenings as of May 1, even for the GCQ areas. There's a very mixed view here. I was talking, for instance, to Dr. Bernie Villegas, one of our top economists here, and Ms. Bing Limhoco, who is, of course, of the PCCI. They see a V-shaped recovery in retail. They're saying that the demographics that we have, young spenders, and our culture to spend, to go out, will not actually lead to a U-shape, but a V-shaped recovery. Do you see that happening, especially with all of these protocols that are now being put in place?
In my opinion, I think the performance of the retail industry will be mixed. There are some players who will continue to experience weakness, as to what you mentioned, because of this pandemic. We may be seeing some change in our spending habits. And in addition, with the lifting of the ECQ, we may be there may be uh, some some limits in terms of the foot traffic going into the malls. So the recovery may not be that be fast for certain players, especially that those companies, those sectors or subsectors that will be affected by some limitation in terms of foot traffic.
Will the restaurants, for example, be able to pivot into deliveries? And will these types or retailers be able to pivot into e-commerce? And will these types of revenue streams actually make up for the losses that they'll see from the retail traffic or closures of malls?
Well, admittedly, initially, yeah. Sorry. I think admittedly, an immediate impact. We won't be seeing, let's say, this restaurant operators to automatically shift towards e-commerce. There might be some lag, but I think eventually um, the potential revenue coming from online business may be enough to offset the decline in terms of the number of foot traffic visiting their branches. I think thankfully we now have these food delivery companies or food aggregators that will allow you know restaurants to fully migrate
Hmm.
to uh, taking online business or taking deliveries. Um, I think if this happened about 10 or 15 years ago, uh, we, we, uh, I think it will be
Yeah.
very difficult for the retailers or for restaurant companies to shift easily to an online platform.
Okay, so hoping that they will actually be able to shift and recover those revenues through delivery services. Let's move over to financials. We have broken, I think, most of them. Apart from Metro Bank, we haven't had that yet, but we do have BDO, BPI, Union Bank, and Security Bank here. I just wanted to do very quickly on Security Bank that had their first quarter net income up 21% to 2.9 billion pesos, but they did mention that this was due to trading gains. So, in fact, their non-interest income increased 184% to 5.1 billion pesos. And total net interest income up 41% to 8.1 billion pesos. That's on the back of loans growing 14% to 470 billion pesos. Sir, why the divergence in the earnings? I mean, I know that you can't, discuss because you're also Metro Bank, but just a general feel of, are these earnings on the back of the base year, base effects, trading effects, um, on the back of BSP policy easing, and does this easing show that it has it's boding well for the earnings, at least in the first quarter?
I think there are, so far, most of the banks have come up with their numbers. At least about three or four names have already released their first quarter numbers, and you've seen them. There's a common denominator. Their earnings for first quarter in general have slowed down because of increase in provisioning
Okay.
for bad debt. I think this is anticipation of potential rise and bad loans for the succeeding months because of this pandemic. But if you look at you know their trading gains or trading portfolio, basically it's also mixed. But I think it all depends on their trading strategy of each bank. But I think down the road we may be seeing some additional gains coming from this segment or this business, considering that um, interest rates, there has been some cuts in policy rate and cuts also in required triple R. So that should give some room for further decline in yields, and that should also bode well for the trading gains of each bank's portfolio. Now, in terms of top line, we may be seeing some slowdown in terms of loan availment because a lot of companies have now, because of this incident, have cut their capex. So loan demand may slow down.
Okay, we're actually losing Sir Trinidad. Sir, can you hear us?
Yes, yes.
Okay, sorry, we lost you for a bit there. Go ahead.
So as I mentioned, I think moving forward, loan demand will slow down because a lot of companies have cut down their capex program for this year. Um, so I think that will be the trend. In addition, considering that there has been some cuts in policy rates, so there might be some further downside in yields. So we
Okay.
may be seeing some trading gains from banks to continue for the rest of the year.
Okay, so thank you, sir, for that question. That was, of course, Ed Sir Trinidad, head of FAMI, for sharing with us his insights. He did mention that there's still some downside risks that are not priced in yet in terms of local markets, but there are some bright spots, overweight, for example, on the telco space, and still some optimism in terms of the pivot of our retailers and also restaurants to delivery platforms. Thank you so much for your insights, sir. Okay, so very quick peek on our markets before we end the broadcast. Just very, very quickly here, we are trading at 5590.87. That is up by 0.3% this hump day. So thank you so much for watching. That was a first look into the business day. Today is Wednesday, April 29, 2020. Catch us again 10:30 tomorrow morning. I'm Danny Laurel, and we are One News.